Welcome to Own the Chaos.
Chaos Crew.
The stock market is crazy and chaotic.
And then there's the Kronos Group. Yes, people, how could I not have a pot stock on this list?
Brad and Fat Man Zoom are here to help you own it.
All right, we got the top stocks to buy if Kanye wins the presidency.
Taking it to the suits, being relatable and hilarious.
That is crazy.
We have a nice super boner, quite a lovely green one.
Over $31.
We have a nice super boner.
What's pooping is what Mitza TS says. So what's pooping, guys? It's all right. You can watch this while you poop. It's fine. It's cool. We appreciate you. Welcome to Stock Watch Sunday. My name is Brad. That is Fat Man Zoom. Good to see you. If you guys are joining for the first time, welcome. If you're coming back, welcome back. It is, and we're able to hang out with us. Are alluding to that fact again.
My weekend was great. I went to a comedy show yesterday. It was hilarious. However, on the way there, Nicholson, so now I can say that I officially know, oh, you can't handle the truth. You want me on that wall? You need me on that wall. So if anybody ever needs someone to randomly deliver that, I think I'm ready. I'm almost there. I've been practicing it for 24 hours. I think I got it. So maybe if we have time at the end, I'll give you guys a sneak peek. So that was my week, and that's a win. That was my weekend.
The Tyson fight, which was interesting, and Logan Paul just went freaking laid the smackdown, which was pretty wild. Just unbelievable, bro.
Yeah, that was a great fight. That was the highlight.
Yeah.
I hope those two, Tyson and Roy Jones, never fight again. But with that being said, we got a great show today.
We do.
We're going to talk about Zoom. We're going to talk about our top 5 stocks. But I wanted to tell you something that I don't know if you know. We're coming to the end of the month. I was pulling up a couple days ago. I was actually pulling up the numbers from our November top stocks for November to see how many we got right.
Yeah.
So we delivered 10. You know how many we got right?
I'm going to go on a limb and say 8.
9
Ooh.
So far, and there's a couple days left in the month.
All right.
Zoom was out. It was down 9% when I pulled the number a couple days ago, and then it went on that run, and now it's up like 0.5% or break even or something from when we called it out. So we nailed that. I'm excited for December top stocks, but I wanted to give you a heads up. Tesla's up over, I mean, these are the numbers from before, over 40%. PayPal.
Jesus.
Wayfair was the only one that was down out of those so far.
Which really, I mean, I think that even with Wayfair being down, I'd still be buying it up all the way down here. So
we were 7 out of 10. Teladoc went on a run too, man. Teladoc was down. So, hey, that just goes to show you, man, patience, persistence. We're coming through. So I'm looking for a 10 out of 10 on December.
I think we can do it. The Santa Claus rally is definitely going to help us out. I see a couple people mentioning something about the stream. Just give it a refresh, guys. I don't see anything wrong on our end, so not sure what's up with that.
For me.
But everything looks good here. So not sure what's going on with that, but let's go ahead and get into it. I mean, we have Zoom coming up. We talked about Zoom. Zoom was on the one of the top stocks that we talked about last week, potentially buying into, and it gave us that opportunity. Monday, Zoom tanked just as we expected it to because vaccine news came out, gave us a good opportunity to get into the low 400s, and sure enough, Zoom goes absolutely insane, and all the way into Friday. So we got earnings that are coming out tomorrow on Zoom after hours. I would expect that there could be another opportunity to maybe even get some Zoom tomorrow morning if we see more positive vaccine news, which we actually saw positive vaccine news over the weekend from Pfizer as they are distributing that vaccine to Europe. But I think that we could definitely see potential selling on Zoom. I'm not saying that it's going to happen for sure, but we could certainly see some of that on Monday if we see positive vaccine news, because that just seems to be the running thing. But I think that'll still be a good opportunity. I think, in my opinion, Fat Man Zoom, that Zoom is going to crush earnings, and I know that you do too, but wanted to get your thoughts on just how much you think that they're going to crush.
Yeah, so last quarter Q2, their estimated per share was 45 cents. They came in at 92 cents. They crushed it. They've never missed an earning since they've been public, and they typically crush it by 100% or more. So we'll see if they can keep the streak going. This quarter estimates are 76 cents a share. I have $1.14. So I have them crushing at $1.14. Now, here's the thing. I did a lot of number crunching before I got here. That's my like reach scenario. That's going to be a tough number to get to. I'm going to actually give you guys specifically what to look for. So the revenue, I think the revenue is going to be in the range of 764 million to 830 million.
Yeah.
If it's in that range, it's going to be from 84 cents to 91 cents. Okay.
Yeah.
That would signify basically 400% growth, 350 to 400% growth year over year. And if they hit 400% growth, man, I know typically we expect to see a pullback after earnings more often than not. And last quarter, was a monster beat. And so like there was a run up. I thought that we wouldn't see it again.
Yeah.
But the more I think about it, I think given the vaccine situation, it has actually created basically an opportunity for Zoom to make that run up to $600, which sounds wild.
Yeah, and we've been saying it for the last month or two that we felt as if Zoom was going to be a $600 stock. And, to your point, for its 3 months ending in July, Zoom sales surged by 355% year over year. There's nothing that's happened between then and now that makes me think that they're not going to continue to grow from there. And let's not forget, to your point that you brought up several times about how they're basically giving their services to schools for free. They're not charging them for that, so that there's more opportunity for growth there. And we've talked about multiple times about how remote work is here to stay, whether the vaccine gets sent around the globe or not. If we all got the vaccine tomorrow, Zoom's still growing. It's not going anywhere, and neither is remote work. And so it's just crazy, bro. I mean, I just don't think I have them coming in at $1.03. So just under what you have. I had them just breaking that century mark for the first time on earnings. And so I think they do it. I think it's going to be done easily. I wouldn't expect some wild $150 move after hours if they do end up beating and crushing the way that we think they do. I think that we could see a move to 600, but I'm not sure that we see the kind of gap up that we saw last time around. Could be wrong, but I still think it's going to be a really good opportunity to make some money. And I think that maybe if we do see some positive vaccine news tomorrow, for whatever reason, investors just want to run away from this on positive vaccine news. And I think that could end up being one final opportunity if you feel like you missed out on Zoom to potentially get into it.
Yeah. Tomorrow is going to be interesting. I got to imagine that this thing is going to run up tomorrow. I'd be surprised again, unless there's vaccine news that prevents it from doing so. But all things equal, I think it does. And I wouldn't be surprised if it has a 5% plus move tomorrow. I really would not. I wouldn't
either. Just to hedge my own risk tolerance a little bit, I did end up selling a third of my position on Friday because of just the insane run up. And if you guys look and check this out over on Webull, this had a move all the way up to $471 a share from the $365 range over the last 2 weeks that this has been trading. Had a few ups and downs throughout there, but really not much overall to really speak of. So it's just had a monster run. And so if this ends up running into tomorrow, like you're saying, another 5% move, I feel like I would be amiss to not try to sell at least something else. Maybe selling another third and just leaving one final third in there just through earnings to see how it goes. Because I don't know if I would want to be out of shares completely from Zoom, but I definitely understand, and a lot of you guys should also understand the volatility that goes along with Zoom. And if by some chance there's just one thing that gives investors reason to sell, you could end up seeing some panic selling in this as well after hours. So make sure that you guys are managing that risk, but we still feel really strongly about Zoom and as bullish as ever, I think. And I think I speak for you as well.
Yeah, I mean, Zoom's earnings is probably the deepest I've dug into any earnings outside of Penn.
Yeah.
The last quarter. And the only note I made with headwinds, or I would say is like the last quarter that you could potentially like put a knock on, and it wasn't even a knock, was the growth with accounts for 10 or less people.
Right.
And there was only 30% growth, while all the other ones, like all the other metrics, were like dominating out of this world. That's the only thing that you could potentially say. And 30% is still really good.
Yeah.
So I would say going in there for people to really think, what I would suggest people looking for as far as key metrics in this earnings, what you want to listen for is, so enterprise traction, so large account, 100K plus accounts, that should hit 1,000 this quarter. That's a milestone as well. International growth was huge. If that continues, if we see 400% growth, if all these things line up, you should see this stock move. And even if there's profit taking, it's a buy opportunity, go in. And then obviously, like we said, education's an opportunity.
Yeah.
Healthcare, I hope to see things. And then Zoom for phone, Zoom for home. We didn't even talk about that. That wasn't a part of last earnings. If any of that is coming in for this earnings, all that bodes real well for the company. I'm definitely going to do a breakdown of this one tomorrow morning on my Fat Man Zoom channel. So if you guys want more details, I can't get into all of it right now. I basically broke down exactly what we're looking for, exactly what we heard, and sort of a guide to this earnings. So excited for it. Let me just welcome really quickly before we lose these people. We got 3 crew members from the jump. Lucas Weatherby Johnson, welcome to the crew. Faraz Syed, welcome to the crew. Brendan Tampa Clinch, welcome to the crew. Nice. We just get 3 people right off the bat. That feels good.
I know. We didn't even have to say anything. We appreciate that. So if you guys saw those folks hop into the Chaos Crew, they hit the join button next to subscribe, and now they will be getting a daily watch list from us, as well as access to our public Webull portfolio, also private live streams and that sort of thing as well. Helpful tips and stuff that we only share with our Chaos Crew. And we are getting ready to eclipse a milestone, Fat Man Zoom.
1K, 1,000.
Yes, sir.
So we're going to do a little promotion. So when we hit 1,000, what did you say we're at? Like 970 almost?
So before this live stream, we were at 965. With those 3, that brings us up to 968, providing nobody canceled in between that time. But yeah, so we're 32 away from 1,000.
Yeah. So what we're going to do to sweeten the deal is we're going to give away to one lucky Chaos Crew member a free share of Tesla. Well, it's not free for us. It's free for you. So we're going to buy you a share of Tesla. So anybody who joins between now and when we hit 1,000, we'll keep you posted. Once we hit 1,000, we're going to do a raffle and we're going to pick one person to get a free share of Tesla. We're going to do that on the following Stock Watch Sunday to whenever we hit that 1,000. So exciting. Some lucky person is going to get a share of Tesla.
Yeah, I'm super excited for it. Just to clarify, guys, we're not actually sending you a physical share. I wanted to make sure that people were understanding. We'll just end up whatever the price that that Tesla closes at that Friday before that Stock Watch Sunday when we hit 1,000. That's when you'll be getting. We'll just either Venmo you, PayPal you, whatever the cash value of that Tesla share. So whatever that price is, that's what we'll be sending over to you, so that hopefully you buy that one share of Tesla, but you really are free to do whatever you want with it. But we just wanted to basically give you a certain price amount. Tesla just keeps rolling. Almost got to $5.99 on Friday. It's just unbelievable. So it just keeps costing us more and more money. So, but I'm cool with it. I'm cool with it. We appreciate you guys, and you know, the amount of support that you guys have shown us throughout this whole process. I mean, we've been part of promoting the Chaos Crew for, I guess, about 7 months now, 7-8 months. And never really would have imagined that it would have grown to what it is now, but it's pretty awesome. And we have you guys, our Chaos Crew cult, to thank for that. So super excited for what 2021 holds as well. Already looking forward to it. All right. So to and Ezra, Also, welcome to the Chaos Crew. So we are getting ready to get to our top 5 stocks that we are watching for this week, as per the usual on Stock Watch Sunday. You guys know what the drill is. We have 5 stocks that we're going to share with you. I have 3. Fat Man Zoom has 2. I'm going to go ahead and lead off with my first stock that I'm watching this week, and that is CrowdStrike. CrowdStrike has been a fan favorite. It's been my favorite. It's been absolutely insane the way that this has been moving since the start of the pandemic. And this is really, I hate to use the word that it's benefited from the pandemic, but really, when you look at it, it kind of has, with the way that remote work has, and we were just talking about remote work as far as Zoom is concerned. When we look at the way that remote work has evolved, CrowdStrike just fits perfectly into this. They're cybersecurity, but more focused on the cloud and protecting your assets digitally. So if you're a business and you have remote workers, you really need a company like CrowdStrike to come in and make sure that you're protected. Well, CrowdStrike has grown significantly because of the pandemic. They have crushed earnings every quarter, all leading up to this one. I have no reason to believe that they don't do that this time around. Their estimated earnings per share is flat, break even at $0 per share. I have them coming in at 5 cents. Last time around, they came in at 3 cents. And I think that, to some of the points that we're talking about as far as Zoom is concerned, remote work's here to stay. It's not going anywhere. It's only going to continue to grow, especially with the elevated amount of cases that we've seen. And yes, the vaccine's on its way, but it is a long ways off. And that still gives businesses even more time to figure out if they want to go ahead and stick with remote work or have everybody move back into the brick and mortar and pay those leases and all that good stuff, incur that extra expense. My hunch is that there's not going to be too many businesses that want to do that. So then CrowdStrike comes in and does really well as far as that's concerned. They differ from, like I was saying, from older cybersecurity companies because they don't deploy on-site appliances and that sort of thing. Instead, it's their tools are all cloud-based. We really need to see revenue growth, which has kind of been a pain point, and it kind of was why they sold off a little bit last quarter, because even though they beat earnings, their revenue didn't come in what investors were expecting. We really need to see some really good retention rate as well as subscriber growth for this thing to keep going. So if they blast those key 3 metrics plus coming in and beating earnings, I think that they will actually do pretty well. Now, if we come in here and look at the Webull chart, I think that, let me go ahead and pull that up. CrowdStrike. CRWD is the ticker symbol. And again, they have earnings after hours on Wednesday, and they closed at 153.83. Now, if they come in and actually beat these earnings, I think, and meet those metrics that I think that they'll actually meet and beat, we could see a move up over 153.90, which is the all-time high for CrowdStrike. I think we end up seeing this closer to 175 if they come in and beat all the expectations that investors are expecting here. I like CrowdStrike a lot. Fat Man Zoom would love to give your brief thoughts on that.
I have them beating 4 cents a share. Charlie Connor said that Motley Fool likes them, and they should definitely beat. Listen, most companies should definitely beat.
Yeah.
I got to remind you people, beating doesn't mean the stock goes up. Doesn't matter. We need to see guidance. We need to see what moving forward. So just keep that in mind. Moving on to number 2. Number 2, I have Costco, and I brought it up because of the special dividends. So the special dividend X date is close of business day, December 2nd. So same day. If you are holding on to Costco when the market closes on Wednesday, you will get $10 a share, which will show up in your account December 11th. So I wanted to let you guys know this, and I'm not sure if you realize it, because we talk about Costco and you've mentioned that it's sort of like steady Eddie.
Yeah.
It's one of the stocks that you kind of hold forever. Costco, the thing about Costco is like, I feel like you could, I feel like it's something better than Coke. Like, I think people put it in like the Coke category, which is, it has growth and you hold it over time, you hold it forever. This thing does move over time. So it's up 30%. I think that when we get the reopen and the vaccine use, it's going to continue to go up. It benefits either way. It's essentially recession proof. And I just want to give you a few numbers. So it's up 30% this year. Last year, it had 50% growth. Year before it, 10, and then 16%. The last time it had a negative year was 2008, which was the crash.
That's crazy.
And even, and so, I mean, considering that, this is a stock that is just underappreciated. I know people talk about it, but it's a monster.
Yeah.
We have earnings December 10th. The interesting thing is, what does it do after ex-dividend date? Could it go down? Sure. If it gets to 380, I don't think it gets below that, but if it gets to 380, below 382, I'll buy that.
Yeah.
So it's a good opportunity to be in. And they've, they consistently give these special dividends, which show they're trying to give money back to the investors. So I love Costco.
Yeah, I love Costco too. I don't know if I could say enough nice things about it. It ended up going to all-time highs at $390.67. That special dividend is probably going to continue to push this forward. We might see some small selling after the ex-dividend date, but look around the corner, just as you were mentioning, for earnings to be coming up as well. I think that this is going to be something that will definitely be worth keeping a close eye on. Costco is it's just something that you could hold on to forever and feel comfortable holding on to it forever because it's just going to continue to perform. But this could definitely be an opportunity to perhaps be in and out of Costco as well, especially if you guys went in on that special $10 dividend, which is unprecedented. A $10 dividend from Costco is pretty impressive. I think it's the largest special dividend that I've ever seen from them. So really good stuff from Costco. For me, the next one that I have is Dollar General. They have earnings coming up on Thursday, pre-market. Estimated earnings per share at $1.97. I think they come in at $2.53. If Dollar Tree was any indication of what we could expect from Dollar General, I think that Dollar General also smacks this out of the park. Last time around, they came in at earnings per share of around $3.12. So I'm even being conservative here, I think, especially even with their estimated earnings per share at $1.97. I think that my $2.53 is probably conservative. Did you know, Fat Man Zoom, that Dollar General store pays for itself in under 2 years?
I did not know that. That's incredible.
Yeah. The company has already identified 9,000 spots to open yet another store. And so the fact that they have, and their same store sales continue to go up even during a pandemic. So it pays for itself in another 2 years. They got 9,000 spots they're looking to open new stores at, and their same store sales continue to grow even through probably one of the worst economic contractions that we've ever seen. I love Dollar General, not just for this week, but for years to come. With those kind of metrics, with the health of this company, the way they've been going, this is another one, kind of like in that same vein with your Costco. This is, you could just buy this thing, and it's not sexy. It's not something that's going to blow anybody away, but you could buy into some of this, continue to build a position 20, 30 years down the road. This is something you could very well retire off of.
Yep. And up 40% year to date. Man, my number is insane. So yeah, you could say that yours was potentially conservative.
Yeah.
I got to give my number because I got to trust the calculations I make. I have them beating $3.74.
God damn. That's crazy. Yeah. $3.74.
$3.
Oh my God. That's crazy.
It sounds wild. We'll see, but they beat. Now, here's something to consider. Dollar Tree crushed it. It's gone up 15% since then.
Yeah.
We were talking about, well, what is Dollar General going to do? It's only been up it's less than 3% it's been up. So I think this sort of patterns what happened with Snapchat. Snapchat crushed it, and then we were looking for marketing spend, and then they showed it, crushed it, stock blows up, and then every other stock in that industry basically did the same thing. They followed the same pattern. You would think they would all kind of massively move up, but they waited till their earnings and they moved up.
Yeah.
So to me, there's no sure bets, but to me, this seems as close to like a no-brainer as anything as far as like beat, move in general. So I like Dollar General. I definitely like it better than Dollar Tree if I had to pick one, but both of them you can't go wrong with.
Me too. And I think that when this came down from going to 225.25 and this came down and sold off to 205, that was going to be the absolute best opportunity that you had at Dollar Tree. I still think that there could be opportunities for this. how to play this through earnings. I think that if you're not in Dollar General, maybe wait till after earnings come out just for the just in case. But if you are feeling lucky here, and I do use that term literally because we have no idea what's going to be happening after earnings. We're only going to be making our best guesses. Most of the time we're right. But, I think with Dollar General, especially with any earnings, you go into this with the understanding that if you try to buy this just to play earnings, you are taking some pretty inherent risks. So I think at this point, especially with the move that it's made all the way up to 218, it might make some sense to just kind of hold off and wait till after earnings come out. But if you want to get in earlier before that, let's see if there's a pullback. If you see something down around 215 and especially down in the low 200s, would for sure be grabbing some up, even if it's before earnings, because we both think that they're going to do really well. Probably goes up from there. Anything down in the low 200s will be a solid grab for Dollar General. What you got coming up next?
So number 4, I have Callaway. People, Callaway.
Good old Callaway. Bringing it back.
Symbol ELY. I wanted to bring this back because we had got into it after earnings. It had dipped down, and we got into it, and we just kind of made this fun play. But that was like just a technical look.
Yeah.
And we liked the Topgolf acquisition. It wasn't even acquisition. They already had 14% stake, but basically they bought the rest of Topgolf. And we liked it. So we got into it. Now, looking deeper into it, thinking about what they're going to be doing moving forward, I've talked about Drive Shack. Drive Shack was one of the stocks that had high upside. Callaway, I think, is just as good of a play, if not better of a play. So to me, they crushed earnings 3 weeks ago. Prospects are looking up. Golf in general, everybody and their sister is like playing golf right now, is wanting to learn golf. And the good thing about what Callaway has done, and I don't know if people can appreciate this or even realize this, is they're targeting the right people. Callaway, well, let me back up. Golf in general has kind of this like historical vibe that baseball has, where it's kind of like traditionalist. You have to like be all in or all out, and it's kind of snooty.
Yeah.
So a lot of golf companies are only targeting people that are really, really serious about golf. If you're not, they don't want anything to do with you. That's a mistake. Callaway, it's clear that they're getting to people that are just in it for recreation, and that's where the opportunity is at. They're a great brand. They're great for people who want to take it seriously, but the money is where people are actually like, they just want to do it for fitness, for exercise, for just an activity outdoors with the pandemic. And we said it with Drive Shack. Topgolf is the leader in this space, where Topgolf, when things come back, they're positioned to benefit off of social distancing. So they're going to be the first ones that are going to see, I think, the bump in hospitality. So I think Callaway's doing everything right. They have an endorsement with Steph Curry that shows again that they're looking for the casual player. And so I expect more ambassadors like Steph Curry. I expect them to dig deeper into that space. And their CEO said they want to be the Peloton for golf. Now, basically what this means is they're going to start connecting with their consumer with the ball tracking, where like they're going to look at the fitness side of things. And I think it's smart. I think they're looking at things different than other companies.
Yep.
And I think in a couple of years, we're going to turn around and Callaway is just going to be ahead of everybody else, and they're going to be chasing.
Yeah, I agree with you 100%. And especially with as we transition to getting things to back to quote unquote normal, the fact that investors felt as if buying Topgolf was too expensive and that it was going to bring Callaway down was just absolutely insane. And if you guys are looking at the chart here, that's what happened here. Once they acquired the rest of Topgolf, we saw this huge selling off, and that's when we saw this as a really good opportunity. We played this through the earnings run up. Guess we probably should have held through that, but we think that there's going to be other opportunities for this. If we see a break up above that $21 range, we could see Callaway continue here. I have every reason to believe that they do as well. It's a really good, solid one, Fat Man Zoom, to bring to everybody's attention, even though it was one of those ones that we kind of half-heartedly got into. The more we dug into this, we were like, man, this makes a ton of sense to just hold on to this. It's nice and cheap. I think that we could see this at $30 a share by April. I don't know about you, but I think that could definitely be a possibility, and that would mean a 30% move for Callaway. For me, the next one, the last one for this week that we have watching, and we're going to talk about a couple other ones because I have some runners up. I got one special bonus one, if you will, that I think is worth watching too. But this one is going to be DocuSign to round out number 5 here. DocuSign closed at 226.87 on a little bit of a run up since it sold off with positive vaccine news and that sort of thing. Another one of those remote work plays, but again, another opportunity for me as far as I'm concerned for remote work. I think they crushed this quarter's earnings. Their estimated earnings per share at 13%. They come out with those earnings on Thursday after hours. My estimation is going to be around 20 cents per share. I think that DocuSign is the way that we're going to do business from now on. If you guys still use a fax machine, you're not going to be using one for too much longer. If you use any of those other scanning type of apparatuses, whatever you want to call them, that are now obsolete, this is the way that everybody's going to be going to sign documents. You're probably not going to be signing paper contracts for too much longer if that's something that you're still into. DocuSign is here. It's here to stay. It's only going to continue to accelerate from here, in my opinion. The company had around 749,000 customers as of the second quarter of its fiscal year, and DocuSign is a software as a service company, if you guys don't know, subscription packages to its clients. And so I think that we could see revenue climb maybe even 95% compared to last year. And so this is going to be a really strong quarter for DocuSign. They ended up running up as high as $2.90 per share on their last earnings. And so if they beat earnings, then they beat these expectations, especially when it comes to revenue and subscriptions. I think that DocuSign could make a run as high as $2.50. Not ready to pull the trigger on that $2.90 spot yet, but if they end up blowing everybody out of the water, that's certainly on the table. And when this happened, went all the way up to $2.90, this was at the height before September rolled around. If you guys recall, there's a pretty strong correction in September. So earnings came around, the correction happened literally the day after, and so DocuSign came down. I think that this is just a really solid opportunity for DocuSign. We should see this run pretty close to that $300 range. Maybe not by the end of the year, but towards that first half of the year, I think we could see DocuSign make another move towards $300, and we see that start this week with this quarter's earnings.
Yeah, I got them beating the Michael Jordan special, 23 cents a share. For sake of time, that's all I'll say. I agree with everything you're saying.
All righty. Well, that is our top 5 stocks for this week. If you guys, I just wanted to throw one special runner-up or honorable mention, and that's Alta. Alta's, I think, going to crush earnings as well. It's already done extremely well leading up to this week, so make sure that one's on your radar as well. It's at 281. I think we see all-time highs this week on Alta. And that is going to do for our top 5 stocks for this week. If you guys are interested in getting a list like this every single day, make sure that you're hitting the join button next to subscribe, become part of the Chaos Crew. We certainly would be happy to have you guys over there. Fat Man Zooms, you got anything else?
No, just keep liking and subscribing. Get the notifications, people.
That's right, guys. All right. So speaking of liking and subscribing, we got over 500 folks in here, 521, and our likes are a little bit lacking. We have 100 likes up. So if you guys could hit that thumbs up, help support the show. If you guys are getting value out of tonight's live stream, we certainly would appreciate it. And if you're not subscribed, consider hitting that subscribe button as well. We go live on Tuesdays and Thursdays too, and we put out videos throughout the week as well for things that we just like to talk about. So if you guys want some more video content like that, and then we certainly would appreciate you guys hitting that subscribe, hitting the notification bell. And now we're going to get on to some of the questions that you guys have. What are you watching? And if you want our thoughts on that, make sure that you're hitting up the questions in the chat, and we'll get right to it. So what you got, my man?
Well, first, let's get your cheesecloth condom pick of the week.
So that is going to be, man, I know I always forget to do this one. That's probably going to be, I'm just going to go ahead and go on a limb and say just all EVs. And I'm not going to, I know this is a blanket statement, but the EV sector has gone absolutely insane. And I'm not going to lump Tesla in this. So we talked about EVs to buy that are not named Tesla last week. And now we're getting to a point to where they are just absolutely insane and they haven't proved anything. So if there's an EV out there that hasn't proven anything and they don't have a product, and we could actually even move NIO out of that as well, then the bubble here is going to pop at some point. So just make sure that if you didn't take profit on any of the EV plays that you're in, then I probably would consider doing that. Maybe even at least running yourself with just house money, taking the money that you put in out of it and holding on to the rest. But I'm just going to put out a blanket statement that these EV companies that are continuing to run and coming out of the woodwork, it's not going to last forever. The rug's going to get pulled at some point.
All right. So the questions. Flyers HC, is SBE a sleeping giant in the EV area? Oh, sorry, EV era.
Speaking of EVs, it's already a giant, right? I mean, it's already moved an unbelievable amount. I think that there's definitely a possibility that this continues to go higher and we see more value out of this, but this is too high too quick. This thing's gone from 1365 all the way up to 4230 in a matter of 2 weeks. Unbelievable moves out of this thing. And it just kind of goes to my point. I think that we're in a little bit of an EV bubble at this point, and these companies that have yet to have proven anything and yet to have sold a dime of anything, it's really risky. So just be careful with this. I wouldn't buy it all the way up here. Wait for some sort of pullback, at least to half of where it's at right now, in my opinion.
All right, next question. Rodney, I see you've searched DraftKings recently. I was wondering if you have any opinion on Lincadia Holdings, which is a SPAC merger with Golden Nugget. Thank you in advance.
Is that that's LCA? Yeah. So I did search DraftKings lately. I'm huge in the sports betting sector. I think the sports betting sector is going to continue to roll here, especially as states continue to legalize this. Fat Man Zoom's been pretty vocal about the Michigan news that we're waiting on, and LCA definitely has stood to benefit from this. I think that LCA, though, is run up too much. It needs to come back. The gap ups that this thing has had has been absolutely insane. So wait for some sort of gap close, at least back to the 1865 range. We saw this go up to almost $21. See if there's some sort of pullback. Would not want to buy it all the way up here.
Yeah, I mean, I like it. I would play MGM if you're looking at LCA.
Yeah.
And you're saying something other than Penn, I would say MGM. Great short term, great long term. I mean, listen, you're getting caught up in SPAC.
Yep.
You're getting caught up in the SPAC hype.
Yep.
There is a stock called MGM, which is better, period.
They have probably arguably the best balance sheet in the industry, really.
Justin R., I got I got fucked on Palantir thanks to Citron Financial. What are your thoughts?
Listen, we talked about this, that this thing can't go straight up forever. And I've been very vocal about my love for Palantir. I think that Palantir is a really great company, and they're going to continue to do well. I think that there's got to be some sort of cool-off period. If you can stomach some volatility here and want to continue to hold on to wherever you bought this at, I hope that you didn't buy this over $30 a share, because I just don't know why you would do something like that. But we've been talking about Palantir since under $10 in shares, said it was buy under 10. And I've been saying since then, since it's gone up 100%, that I would not buy it over $20 and just wait for this to pull back. So hopefully you didn't go all gung-ho on this thing and you left yourself an opportunity to add to this. I think dollar cost averaging is probably the best bet. Long-term Palantir is going to be a good company to hold on to.
D-Ray, what's going on, D-Ray? If you're taking questions, did you take a look at CRM? Earnings are Tuesday. It's testing support. Wonder if it'll bounce off or fall through. It dropped on the news of work merger last week. FYI, before Brad answers it, Tuesday is when we will actually our Tuesday live stream, 2 p.m. Eastern time. We're going to go live for earnings. We haven't talked about it, Brad, but I imagine we'll just stay through earnings.
Yeah.
We'll do a reaction or something.
Yeah, we can do that.
But we'll be live. That's going to be the topic of discussion. Normally it would be on our Stock Watch Sunday, but it makes a lot of sense Tuesday because after hours. Brad, go ahead and answer the question about the support.
Yeah. So as far as the chart's concerned, I actually talked about Salesforce having a support here at 246. And so it seems to have bounced off of this. I think that the potential talks with Slack are actually good. And this kind of makes me think about what we talked about with Callaway, about how investors feel as if, an investment or an acquisition of a company that seemingly costs a lot or would be overvalued at this point doesn't make any sense. And I disagree with that. I think that if they do, and these are still just rumors, but if the rumors do end up coming true that Salesforce is looking to buy out Slack, I think that only helps add value to Salesforce. And they have so many other things in the works. And I know that Fat Man Zoom can speak to that as well, that Salesforce will continue to move up and continue to grow in value. I think this 245, 246 area is definitely a good spot to grab some.
Yeah, I actually got in around 248. So I'm in a small position. And so I like it. I'm sorry, not small position. I'm in it in my long-term account. So I'm not day trading this. I think it's great under 250. If it doesn't move similar to Callaway, I will add on. I believe in this company so much. We'll get into the reasons why on Tuesday. So definitely tune in Tuesday. Again, it's 2 p.m. Eastern time.
Hit that notification bell.
Yep. All right. Next question is Shane Haley. I know you're all about Santa Claus rally. Do you think the rebalancing and institutions taking profits at the end of the year will cause a correction?
That's usually what always happens. We see a Santa Claus rally leading up into Christmas time, and then that week before the New Year is usually when we start to see some selling off or some volatility, and even after the New Year, you start to see some of that as well. So I'm not saying that we see it through all the way through December 31st. There's just typically a week where we just see crazy amounts of movement. I think that this situation that we're in is a little bit different because there's more than just the Santa Claus rally or just more than people shopping for Christmas, even though we've been very vocal about this being a record year, especially for e-commerce for the holiday season. But there's other things that play here. We have a new president coming in. We have a vaccine. We have a potential stimulus coming in at the beginning of the year. I don't think that we're going to see this in December. So just don't hold your breath on that. But there's so many upcoming catalysts that I think that we'll see some more accelerated buying for longer than our typical Santa Claus rally, which is usually about a week.
I think Seth asked the question earlier. The 5 stocks we went over, I guess you missed it. CrowdStrike, Costco, Dollar General, Callaway, and DocuSign.
Yep.
There you go, Seth. I also want to shout out Workshop Yoga. Welcome to the crew. Free my grandma. Thanks for the donation. And FYI, I'll bring up stockwatchsunday.com. If you guys go to stockwatchsunday.com, there's actually a donation button right there. There's also, if I don't get to any of your questions, ask a question there. There's a button at the top that says ask a question. So go to stockwatchsunday.com. If I don't get your question, that'll email us and we'll email you back, get the answer through.
I'll put the link in the chat here for you guys.
Next question we have Tan179. What's going on? What do you think about Tree, this lending tree? It seems like this is a bottom. I'd like to start a position to run alongside my rocket into next year.
Yeah, I think that this is definitely a good one to potentially look at as well, especially if you like Rocket. It's not quite as big as Rocket is as far as the size of the company or the amount of sales they do, but Lending Tree is still very much in that space. The only thing that I would caution you against is, if you buy Lending Tree, it's almost as if you're buying, it's the same as like buying Penn National and DraftKings. Why would you want both? And so that's just my own thought process on that. You can own both, but why would you do that? Figure out which one you think is better and then just go with that one. If it's Lending Tree, so be it. If it's Rocket, then stick with that. But that would be my thought on that. Buying two of the same company in the same sector, the same industry, for me, it's just like, well, find out which one's better and then just stick with that one.
All right, next question. JC, what's up? So being anything cloud-based is moving quickly to Rono. What about SPAC? You guys and your damn SPACs. Sorry, JC. This is not you.
We love you. We love you.
SPAC APXT. Ave Point. I'm sure I'm pronouncing it wrong. APXT.
It's Apex Technologies, right?
Sure.
Okay. I didn't know if you mentioned the company.
Oh, no, he didn't. Sorry. Average point. I guess it's the average entry. I don't know.
I got you. Okay. Well, either way, this is gapped up from $11.22 all the way up to $15.43 in one day. So you got some time to let this thing settle out. I would not be buying it all the way up here. What nuts? See if it doesn't come back down to at least $12 a share. It's somewhere in that range. Some sort of 50% retracement would be an area that I would consider buying it. Not now after this is gapped up so much.
All right. Chris Mills, should I sell SWBI before earnings? Smith & Wesson.
I don't know if I would sell it before earnings. If you're worried about it, then maybe trim some off so you're not exposing yourself to too much risk than you're comfortable with. But I think they do really well as far as earnings are concerned. A little bit frustrating, I'm sure a lot of you guys that have been in this to not really see much movement out of this, but it has held up over $15 a share quite well. It has a dip down below here and there, below $15, but I think that this ends up beating earnings pretty handily. I think we do see some sort of move out of this. It might give you an opportunity to sell some if you're looking to get out of Smith & Wesson.
All right. Satoshi Nakafomo. FOMO's in your name? Do you guys think about SNDL? This thing has a huge volume in the mornings, and it's now moving. Thanks. I do not know what SNDL is.
That's a weed company, I think. Sundial Growers. And so it is a cannabis company. This is 37 cents per share. Do yourself a favor. I'm sure this will probably move, but if you're looking to get into the weed sector, find a better company than Sundial Growers. We've talked about CGC being one that we think is worth hopping into, and don't even ask me about Aurora Cannabis because my answer will be hell no to that. But this thing has obviously done really well. See this nice steady growth that we're seeing out of CGC continues to go up. Sundial, not so much. We've seen a couple of gap ups here and there, and yes, it is a penny stock, and that's the allure. But if you're looking to just risk a whole lot, then sure, go after Sundial, but get into a more quality company as far as cannabis is concerned. And our favorite one is CGC.
Yeah, and this is a good opportunity to remind you all. And I know we have some new people in here, so not everybody hears the same message. Listen, you can make money off these SPAC moves. You can make money off these Sundial moves. The reason why we don't really know them or care to know them is because we have no interest in a stock that's spec. It's just gambling.
Yeah.
And so I have no issues with people like that, but like we have a lane and we stick to it. And it's just not in like companies that we're just hoping and praying. So, can you get a 30% move? Sure you can, but you can get a 30 to 60% loss. You can just lose your ass, and it's just not worth it when there's other companies that can give you solid percentage growth. So that's really what we try to focus on this channel. So if you guys are looking for that next stock that's just going to move 30% and you're going to get a quick buck, and then we're going to forget about it, this probably isn't the channel for that. Is that fair for me to say?
Yeah. Well, I mean, I think that it would be something if something like Sundial didn't have a terrible balance sheet, and you can see that this has done nothing since June but dilute all the way into the election. This is done. You can just clearly see on this chart that this has done nothing but dilute. And so what that means is basically they're share dumping. They're in so much debt that they're constantly converting shares into the market that really screws over the investor. And so that's what we try to caution people against. Yeah, I mean, and speaking of 30% moves, we see 30% moves out of things like Facebook and Tesla. We just saw Tesla move Zoom, right? So we'd rather see those kind of moves in good quality companies that require taking on less risk than something like this where you could just literally blow up your account in a matter of minutes.
I think the question becomes, if it moved down 30%, would you put more money in? If the answer is no, you don't believe in that stock, right? If Tesla moves down 30%, I'm buying more Tesla, period.
Right. Yeah.
All right. Next question. So we got a few more. Chuck Halen, Blue Apron, ticker symbol APRN.
Yeah.
Anything there? It's a slow climb from the lows.
It has had a slow climb. A lot of this is probably moving because the increased cases in the Rona. But one thing that really surprised me from Blue Apron, these were one of the stocks that I had my eye on, especially since the start of coronavirus and the lockdown and all that good stuff. The concept is great. Having food delivered to you so that you can make good meals. I love the concept that Blue Apron has. The fact of the matter is that they just haven't been able to turn that into money. They haven't been able to make money. And so that's the really frustrating thing about this company is that they've had a really good opportunity to really blow it up to become a huge benefactor of people just having to stay home, or even people that are working remotely more. But they haven't been able to make money. And those last two earnings has reflected that. This has gone all the way up from $15 and come down to $14.13, only to have somewhat of a move. I think that the only reason this is moving is because of increased cases. I don't know if I'd want to be in this through earnings or any kind of positive vaccine news. Would probably want to stay away from that.
Leves Kim, what do you think of NNOX, the RSNA? There's a live demo on Friday.
This is another one that just started trading not that long ago, back in the end of September. I am a little bit nervous about this one because of the amount of debt that they have. So I would just be careful with this. Maybe they have something that could do really well, but this has moved up so much in just the last 4 days. I would be really hesitant to get all the way up here. See if this pulls back to maybe around $45 a share. I wouldn't want to buy it all the way up here.
Funny pranks gone wrong. What's going on, Nate? Where's the best place for a market news feed? I struggle to find live information on the markets, even basic stuff like the recent Tesla recall. I was hours behind. Any suggestions?
Yeah, so there's a couple of them. One of them is Yahoo Finance. That's usually kind of one of my go-tos. I know that Fat Man Zoom uses CNBC, but really, lots of times, especially since I've started using Webull for the last 3.5 months or so, news pops up on this thing like that. And it pulls it from Globe Newswire. It pulls it from Seeking Alpha, from all of the other major outlets, and it's pretty quick. So it's pretty rare that I see news somewhere else that I don't see on Webull. So if you're interested in opening up a new account or starting a new brokerage, there's a link in the description. Actually helps support the channel as well. So if you're looking for a new brokerage, you want to see some news as far as that's concerned, it's a really great platform. You actually get 2 free stocks if you open your account up with $100 or more, and so do we. So everybody wins. If you're looking for another good platform, this would be one to check out.
Jay Chandratis, what do you guys think of upside for Boeing this year? I have 2021 June call options and haven't taken the profits yet.
Such a great question, Fat Man Zoom. Do you know why it's a great question?
Why is it a great question?
Because of what is on the outside of Boeing, and that's Spirit. So we think that Boeing's actually going to do really well. I think that we could definitely see some surprise orders, especially from China, believe it or not, with the new Biden administration probably alleviating some of the stress that, on the relationship that we have with China. We might see some movement there because Boeing actually does have a good relationship with China. And so if those tensions subside some, we could see some really nice orders coming out from Boeing. The better company, I think, not that Boeing isn't going to be a good one to hold on to, but Spirit Aerosystem, SPR, this is a company that actually builds the fuselage for the Boeing MAX 737s. And we talked about this last week as far as some really undervalued stocks. This has potential to go up to 100, maybe even 200% if we start to see things get back to normal. When Max Airs were being produced, this thing was trading up above $92 a share. Not saying it's going to do it overnight, not saying it's going to do it next month, but if you hold on to something like this, I think that we'll start to see some really good moves, maybe even the next 6 to 12 months from Spirit and even Boeing. So these are both going to be good, but I actually like holding on to Spirit a little bit better.
Yeah, and as a side note, speaking of China, I did want to mention that if you guys are in the mentorship, I'm not going to bring it up today because of lack of time, but tomorrow morning, Brad, if people want to talk about it, we can have a conversation about China, the regulations, the legislation that's about to go through. I think it's voted on Friday. We can give our thoughts on that. I'm sure we'll talk about it on Tuesday as well. But I think there's a lot of good conversations to be had. And what do you do with stocks like Baba, NEO, these China stocks? It's going to be a question that needs to be answered. And there's some things you may not know. So if you want to learn about it, tune in the live stream or definitely tune into the mentorship. And if you don't have the mentorship, what should you do, Brad?
There's a link in the description. We're actually doing a Black Friday, Cyber Monday sale. You can get 50% off for the mentorship. I go live every morning with our private group from 9 a.m. to 10 a.m. Eastern time. And there's also a private Discord as well. If you guys want to be part of that, links in the description. We'd love to have you guys over there.
Boom. How about that promo, people? How about that?
Just pulled it right off the top of my head. Been doing this so long, it's just like breathing.
That's all we got. And I know you guys are asking about Rocket, but let me tell you something. New rule, no more Rocket talk. If you want Rocket, we talk about it in the mentorship because everybody knows the answer. It's a long-term play. It doesn't change. If it changes, we'll give you a heads up.
Boom.
Football.
Yes.
So we have tonight Bears Packers. Monday night is Seahawks Eagles, and maybe Tuesday night is Ravens Steelers.
I think I nailed last week's score, by the way.
Did you? What was the score? What was the actual score? I can tell you what you.
I said 24-27. The score was 24-27.
Was it?
Yeah.
There you go.
Hit it right
you pick
on
the
the
right team?
Yeah. Who did I say was going to win?
I believe you said the Rams win.
And the Rams won.
All right, there you go.
I freaking nailed that one. Should have bet on that. So tonight's the Seahawks and who?
So, damn, you knocked that right on. That's pretty impressive. You got it right on the dot. Nice work.
Thank you, sir.
Bears Seahawks. Sorry. Bears Packers tonight. Tomorrow is the Seahawks Eagles.
Yeah, Seahawks Eagles.
You're going to take the Seahawks Eagles.
I'll take Packers Bears.
Okay, that's a division game. That's a tough game.
It is going to be a tough game.
It's not as obvious as it seems.
It's not. The Bears have lost 3 in a row. They've dropped 3 in a row. Mitch Trubisky's starting tonight. I still think the Packers take it, but it's going to be probably a relatively lower scoring game than people realize. I'm going Packers on this one. Packers win 24, Bears 17.
All right. I will take the. I don't think the Ravens Steelers game is going to happen, so I'm going to take the Seahawks Eagles. I will take the Seahawks, and let me do some quick data mining. I'm going to take the Seahawks to win, and I'm going to take them. Oh man, Eagles suck, but
They do suck. They're terrible.
I don't know, man. I need DK Metcalf to go off.
I do too.
35-21.
I do too. Does Carson Wentz start this week?
I don't know, man. But how crazy
If he
is it?
does he play the whole game? I guess is probably a better question.
Cooper Kupp and Carson Wentz were in the same draft, and like the first year after, everybody thought the Rams were crazy not Cooper Kupp, Jared Goff. They thought they were crazy for Jared Goff.
Yeah.
And now look how things have changed.
Right.
Wild.
It is crazy. It's crazy stuff. That's going to do it for us tonight, guys. We certainly appreciate you guys hanging around. We always like to do something fun as far as football is concerned at the end of the show. But if you liked today's stream, if you got value out of this, and this is your first time visiting, first of all, welcome. We're happy you're here. Consider subscribing, hitting that like button, and we're going to be going live as well on Tuesday at 2 p.m. as per the usual. So make sure you're hitting the notification bell as well. Also, if you guys haven't been checking this out, there's been some members joining during the stream as well to be part of the Chaos Crew. Hit that join button next to subscribe, or there's a link in the description if you don't see it there either. And for $4.99 a month, you get a daily watch list from us, private live streams as well, helpful trading tips on investing as well. And Fat Man Zoom, anything else from you?
Yeah. Don't be a sucker. Join.
Make sure you're being entered into that Tesla drawing. You'll get one free share once we hit 1,000. We're almost there, my man. I think we'll do it pretty soon. So certainly happy that you guys joined. Thanks so much for the support. We love you. Hit that like button on your way out. And that's going to do it for me. See you guys.